Good morning, everyone. It is Tuesday, October 4th. There's a lot going on in the market. I think we're on the edge of some pretty big moves, continued to the downside. And I'm going to quickly recap everything that's kind of unfolding through yesterday and this morning. So let's just take a quick look at the overall market momentum. I just want to pull up this momentum chart, which you can, I'll post the link. It's on barcharts.com. But overall, what I'm looking for here is the market momentum. And I've covered this a few times, and I'm going to cover it more detail in a specific a video explaining how I read these things because I do cover it on a daily basis. Keep in mind, during extreme market movements, I kind of throw the stuff out the window and I stick pretty much strictly on price and volume action and using key and support levels on the chart. But just to show you where we stand, generally, if this indicator is pointing 1% or lower, like minus 1% or plus 1% or higher, then I anticipate the market momentum to reach extremes, meaning we'll probably see a reversal. So if I just pull a quick chart up here of the momentum, I'm just waiting for it to load. The bar chart website's been really slow the past couple of weeks here. But looking at this bar chart momentum, to make a long story short, again, I'll cover this in detail. Believe it or not, we've seen some pretty extreme times, but generally, if we see a movement below the 98 or 99 level, any of these little dips down here, usually see the market get bought back up, and anything above the 101 level I consider to be overbought, and the market should pull back the next day. So you can see we've reached some pretty crazy times, stretching way beyond the outer limits, and it just goes to show that there's extreme volatility and that you have to be very cautious, and smaller position size should be traded. So what we're seeing here yesterday is we had the market close way down here, an extreme low, and that's pointing that the market has stretched so far. Think of the middle here as like the center line, and the price action here is a rubber band. If you stretch it way out here, naturally it's going to want to come back to the center and likely go back to the other side to relieve some of the energy from coming back in here. So the fact that we're stretched way out here, I'm anticipating we're probably going to see some type of move back up any day now. And of course, we're down at a pretty good extreme. I'm not saying the market is going to rally today. I'm just saying that you have to be very cautious that when we're stretched this far, we could see a snapback rally at any moment, and you've got to be very cautious. Right now, the overall trend is down, so we're playing that trend. And we're continuing to move our stops down at every key pivot on the intraday charts, anticipating a snapback rally. And of course, when it does, we'll have our stop fairly close behind it, and it will trigger us out of the position as the market rallies and screams to recover from this oversold condition. Now, if I go back to another chart here that bar chart shows, those of you who've been following me for a while, you'll know if a stock is trading above its, or an index is trading above its 20 period moving average, then I anticipate, I expect the trend to continue higher, and we look to buy dips. If it's trading below, then I anticipate the trend to be going down, and we actually short bounces. So the momentum chart here has actually got one, the 20-day moving average. It's got this chart that it actually puts together, and if we just pull it up, there are some extreme readings here, and let me just wait for this chart to load. What I look for here is whenever the market comes down to an extreme, down to about 15 or minus, meaning that only 15% stocks or less are trading above their 20 period moving average, then I usually anticipate the market to actually start to put in an intermediate bottom. And yesterday we saw the market close, and it was extremely weak, and we saw 6% of stocks are trading above their 20 period moving average, and that's telling me that we're at an extreme. Almost everything is sold down extremely hard, and usually if everything is sold off, really there isn't a whole lot left to be sold off. And the fact that we've seen panic selling day after day in the market means that I'm sure traders are starting to run out of shares to sell their long positions, and they're probably running out of margin to continue to short more to add to their short positions. So I do feel as though the market is coming down to a bottom. Now keep in mind the biggest move in the stock markets and commodities happens during the last 15 to 10% of the move. So we could see the biggest drop here happen in a couple days, and the market will bottom here in a couple days, but it will be a big move to the downside if things play out as expected. So the fact that we're trading way down here is telling me that we're getting oversold. We're sticking with the overall trend, which is down, and hopefully we're going to get a big blow off bottom here and see a sharp drop in the market where we'll actually cover our short position for a really hefty gain and likely take a small long position for some type of recovery bounce back to usually around the 50% mark, and we'll go from there as the markets kind of unfold. Another thing I want to show on the momentum page here for bar chart, just let it come up here. If we just look down at the volume, I like to look at the NYSE volume as the main one. Here we've got advancing shares. Just pull up this marker. Advancing shares, declining shares. You can see yesterday we had a huge selling ratio. It was, I think it was about 15 or 18 to 1, something like that. There's about 18 sellers to every one buyer in the market yesterday, shares being bought or sold. NASDAQ also hit very hard. And you can see the new lows 544, 389, new highs almost nothing. That is a sign that we are in a strong downtrend. Now, to flip this, when we were in a nice uptrend earlier this year, we saw these numbers flipped. We saw 300, 500, 300, 500, and the new lows were only at 6 and 400. So these are numbers we haven't seen in a very long time, these really negative numbers here. And the fact that they're this strong is indicating that we are in a very clear downtrend, and we have to be making sure we're actually focused on the short side at the moment. That being said, I am anticipating the market to try and put in a bottom probably in the next week or so, as the market, I have a feeling, could just drop right off here. And at that point, we'll probably change my tune and we'll be actually looking to possibly play a small bounce. But overall, we'll be looking to short the bounce down the road once it starts to lose its upward momentum. Okay, now quickly going back to the charts, we'll go to the US dollar index. Here we've got the 60-minute chart. Just zoomed out. I'm just going to go to the 4-hour chart. It's a little longer time frame, and you can still see all the price action. But just looking at this chart, and if I zoom way back here and just let it load, you should see a previous high. I'm not sure why the data doesn't want to load. I think it's the video recorder seems to freeze it up. But what I'm trying to show you here is simply we've had a nice move to the upside, and we've started to have 1, 2, we're getting a nice surge to the upside. Could start to see the US dollar top out. Now the fact that we've seen a nice strong move straight up like this, it's been a nice steady grind. It's actually a pretty bullish sign in my opinion. I do feel as though we could see the market start to chop and pull back down, just like what we saw over here. Nice move up, starts to chop, and then ends up coming down to a support zone. So we could see the dollar come back down in a little bit. That'll give us our 3 tops, and then depending how it plays out after this, either we'll get a double top or we'll get some type of bear flag, and if momentum starts to stall out, it could actually pull back down the road down here. But right now it's still in a strong uptrend, and it is in a key resistance zone, which is why I'm anticipating this top, which I pointed out yesterday also. It's too bad this chart won't load back here. I'll just go to the daily chart maybe. Here we go. Daily chart, you can see we're coming right up into a key resistance zone. And my key level yesterday I pointed out is what it was, the 80, which is in the middle of these highs and the lows. That's where we're going to have most of the volume traded. The average position is held there, and that's where you're going to find most people either getting in or getting out to cover their position or to short. And that's where we're pretty much coming into right now. And the fact that we've had the 3 surges, we've got a nice steep trend line heading up here. If we eventually do break this trend line, we could see the US dollar come back down fairly sharply, and that would be the strong move in the equities market. So I do feel as though the US dollar is getting really overdone here, and it could end up pulling back in a little bit. Now let's just take a look. We've had a nice strong move up in the dollar this morning, and that usually means lower stocks and commodities. You can see here crude oil is the 4-hour chart, and yesterday we had a little dip to a low in the morning, and it had a nice sharp reversal to the upside. And then the US dollar kicked in and started to rally again yesterday, and it just pushed crude oil straight back down to close near the lows for the day. And then through overnight trading, it's given away even more, breaking down below its previous pivot low. from back in the chart here, and you can see it's pierced it. And this falling wedge pattern is actually a little bit more of a bullish sign, but overall crude oil is heading lower. And this is just the falling wedge, just so you can see it. When you get a falling wedge like this and it picks up speed, usually you see some blow off bottom where it just free falls. Finally it loses. Everybody panics out and hits the eject button, more or less selling oil, and it'll have a blow off bottom, and then that's when you usually find a base starts to form, and then it could go higher. So overall the trend is down in crude oil, and we're kind of just waiting for some type of high probability setup to take place. Looking at gold, here's the 4-hour chart again. Gold had a little bit of a move up yesterday. It did come into a key resistance. It pierced it, by the looks of it, just a hair, just by a dollar or so. That's normal for gold. Gold will usually go up. It'll literally just pierce it, suck in, shake out a lot of the shorts, because they'll have it set if it goes above this high they want out. So it'll do that over and over. Gold is like the #1 commodity or investment I find that will always want to shake out the high. It'll just shake it out, pierce it up. Everybody covers their shorts, and a lot of people will jump long, and then it just gets stepped on and continues down. I find it does that more often than not. So overall, it's still trading sideways, and the key thing to look here still is all the big volume happened during when the market was falling. And you can see here more or less volume has been drying up, and price has more or less been kind of rising up into not the strongest looking patterns, kind of just working its way up. Starting to see some selling volume here yesterday and the day before, and we'll just see if maybe we actually do get one more push actually lower in gold. Now looking at silver, let me just see if I can find the silver chart here. Silver, this is the 4-hour chart again. Silver is actually looking more bearish to me. Of course, it follows closer, a little bit closer to equities, because it's more of a speculative industrial metal. And when everybody's fearful, they sell everything they have to try and preserve their capital. And of course, silver is a pretty good holding of a lot of people's accounts now, simply because they want those huge gains. But recently, a lot of them have been taking some huge losses with the downdraft. Overall, silver is in this tight little wedge here, and volume has been declining, but still the selling spikes are down volume. And if we do get a continued move out of this, we could see another big move to the downside. And if we just zoom out a bit, which I'll just see if I can squeeze it in here. Overall, usually this pattern is a halfway mark, and it, as much as most people don't want to see it, you've got this move down, you've got this halfway mark here. You could take this move again to the downside, and we could actually see silver, this is extremely bearish outlook, but you could see silver hit 20, and of course it would completely cleanse the market if it goes down to this level in the next couple days, with the broad market selling off. So got to be very cautious. This is the reason why I don't want to get into silver yet. It's got a really good pattern showing that it could easily drop another huge amount here in the next couple days if fear really does hit the market and we see the stock market collapse. Now taking a look at bonds, which is more of the safe haven I kind of covered on Sunday night. You can see bonds have had a nice rally the past couple days. This is a 60-minute chart. I'm just going to go to the 4-hour so everybody's seeing everything on the same time frame. You can see we've had a nice run up in bonds, starting to get pretty choppy, extremely volatile, meaning it's getting overdone. And overall, we've come up, we've got a double top at the moment. I do think there's going to be more fear in the market in the coming days. I think we're going to see bonds continue to go higher as money moves into them and out of likely metals and stocks. So I do anticipate higher prices, but I do feel as though it's getting overdone, and we're getting close to, I think, a stock market bottom where we're going to see a bounce, and we'll end up seeing bonds drop and metals bounce and all those things together, but I think we're still a few days away from that. Looking at the SP500 index, or the broad market in general, we've got the daily chart of the SP500, and what I'm looking at here, it's pretty simple analysis. It's more visual than anything, but you can see we had this waterfall sell-off back here. Finally it started to pick up momentum, became more choppy, and it started putting a bottom, and we've had a nice base more or less, or bear flag form since then. And what we've seen, really, we've had a nice we had a breakdown here, nice bounce up into resistance. Selling volume was showing that it was still extremely bearish, and we ended up taking a short position right in here. And we're up about 14% as of the close yesterday in the past 4 trading sessions, on our 5 trading sessions on our short play. And if you just look at this price action, we could simply get, this is the halfway mark. Remember, a bear flag or bull flag usually marks the halfway. So we could see this thing drop substantially lower down into this level here in the next couple trading sessions. And of course, as it falls, let me just clear the chart here. As it falls, if we look at this previous one, we're going to start putting our pivots under each day's more or less high, and we're just going to keep tightening our stops and chasing it down, and eventually we'll get shaken out when you get a bottom in and it starts to reverse, and then we start to look for a new setup. So what we've done now is more or less, once we started to see the move go in our favor, we put our protective stop here, and we actually moved it down to the next day. The next day it's trading at yesterday's high now. This morning we're going to see the market gap down, I think around the 108 or even lower area. It's starting to pick up speed and gap to the downside, so we will be adjusting our stop most likely at the pre-market trading high this morning, somewhere down here, and we're just going to chase it all the way down if it continues, because we want to lock in as much as we can as it picks up speed, and hopefully it goes into a waterfall sell-off where we'll actually start to and likely cover our position, and then from there we might actually look for a bounce, and then we'll be looking to short the bounce. Anyways, I'll just show you the pre-market trading on the SP500 this morning. Here's yesterday's price action, which is the high volume trading. This is regular trading hours, 9:30 to 4. That's when the majority of people trade, and when you see a lot of volatility. And of course, we had a strong move down in the morning. It tried to put a bottom in, started to rally up around 3 o'clock, and there was some big volume in there, but then it just got stepped on. Nobody wanted to hold into the close, and it just got crushed into the close again. And the fact that it closed down at the lows on that high volume is very similar to what we saw last Friday, and that indicates there's still a ton of people wanting to get out of long positions and unwind and go to cash. And the fact that it closed down at the low for the day indicates there's going to be some follow through most likely today. Now, this morning we've seen the market close right around here, and this morning we're trading down another percent and change. So we're going to see a big gap this morning unless we get a recovery in the next hour or half an hour, but that's about where we stand for this morning, and we may be moving our stops to yesterday's kind of consolidation here, or even maybe this morning's pre-market high, and if it rallies up, we'll get taken out of the position depending where we move it. Anyways, that's it for now, and I'll talk to you in a bit. Bye bye.